Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, I'm a little bit behind today, but hey, that's okay. It's Monday and it's probably going to be a little bit of a quiet day because there is like a holiday going on. Hold on. Do I need to, why am I not hearing? There we go. Like, why did the music not start when I pushed the play button? Anyways, so let me show you what's going on in the markets, and then we need to roll forward our instruments. I can hear music in the room. There we go. All right. So let's start with the treasuries. We're having a little bit of a downside coming through here this morning. But I mean, look, it was like strong upside here. I think that there was a couple of different flows coming through yesterday. You know, like that GDP news was not good, right? But then I think that we had other things like end of month rebalancing in particular that did lead to some buying, and I think that that's best illustrated in the fact that they were like pushing up into the close. So I think that's what was driving that. The upside flows though may be less strong this week and in the month going forward. I'm seeing some indications that like the amount of liquidity that's being pushed into the market is going to decline here. So we may see some selling in the treasuries. So that will be kind of the same thing for equities, is if that flow does come through, then we should see the equities start to sell off. And, you know, this whole thing was amazing, but I think there's a really high chance that we retrace that. We'll see though. Oil had a pretty big spike on Friday, but that is mostly rewound. And we're seeing gold and silver buying this morning. Silver's really going. Like, silver's almost back up to its highs. Wow. Wowzer. And then we got copper. Copper is doing good as well. Okay, so the metals are doing okay. There has been some concerns about growth in China. Like, they are saying the Chinese government needs to put more support out there. Okay. And I think part of that is because, like, there's just... China is maybe doing okay, but the rest of the world is not, and there's like the more globalization, so China is losing its spot in the world to some extent, and so that's why I think you're seeing growth kind of level off a little bit there, and you're seeing that in copper, right? At least that's my theory. And then you got over here, well, Bitcoin taking a little bit of a dip this morning. Man, there's been a couple of wild moves in Bitcoin lately, right? Like, they have traded back and forth just below this 30,000 mark a lot. I don't know what this sell this morning is about, but, you know, it's Bitcoin. There's something every day. And I find that sometimes when those big headlines come through, it's hard to figure out what they were. Like last week, supposedly the government, there was this service that said that the government was dumping some Bitcoin, but then they weren't sure, but then they said yes it was, and anyways, this is a big mess. Okay, and then here we got the dollar rising up a little bit this morning after tumbling quite a bit after that GDP news on Friday. Okay, so let's come back over to here. Oh, actually, you're gonna have to just look at my face, and I'm going to roll over my instruments here. Okay, so if we are moving from, oh, well, we just moved from May. We just moved to May, which would be M, right? Sorry. QYY. Oh, I don't have it on here. I have to come back and update my instruments a little bit. Update futures. Yeah, whatever. CME, CBOT. Okay. So this should be K, right? Yep, it's K. There we go. There we go. Now stuff is starting to show up. So again, somebody explain to me, why is it that the expiration code for May is K and then for June it's M? Why? I don't get it. Come on. Oh, whoops. Sorry, hold on. There we go. May rhymes with K and M. No. But okay, M does come after K, but why would it not be L? All right, let's go through our alphabet. H, I, J, K, L, M. Why do they skip L? Did they have something against L because it's just a line and it's hard to differentiate from one or something? It looks like even though there was a strong sell here to begin with on the day, oops, that the buying is coming back in. Well, no, there was some real buying there on that as well in the futures. Let me come back over here. We didn't have any news or anything, right? Yeah. We do have some news later today, though. We get PMI, manufacturing PMIs later today, so. And JP Morgan is saying stuff about the First Republic deal. First Republic deal hasn't changed the odds of a recession, but it has stabilized the system. And JP Morgan CFO says this is very different than the 2008 era deals. JP Morgan CFO says buying receivership institution is different from what we did with Bear Stearns. Expect some pullback in lending and some stress in the real estate market. There were many attempts to reach an open bank solution. Yeah, see, here's Future Trader 71 saying, well, note that the market is closed. Japan is the only major market that is open in Asia, and it's May Day in Europe, and so this is why you're seeing terrible ESF volume. Yeah, that's correct. And we don't celebrate that holiday in America because we don't celebrate heathen holidays, you know, except for like Christmas was kind of a heathen holiday that we turned into a Christian holiday, and same with Easter. But other than that, we don't celebrate. Yeah. Point is, might be a little bit quieter of a day. Oh, you're right. It's Pride Month. That does that does that mean that we get poor volume every? No, nobody cares about that. Pride Month is just a thing so that corporations have an excuse to make commercials about it, but nobody gets it off. Maybe someday it'll start to happen, though. I could see that. Canada has a Pride season? Oh, man. I don't know. It gets weird when they start adding holidays and stuff. Like the Juneteenth thing. Like, not that I'm opposed to having, because here's the thing, right? I think it's a good idea to have a holiday about abolishing slavery, right? You would think that it would be Emancipation Day, but apparently the Emancipation Proclamation was signed on January 1st, so you can't make that the holiday, right? So you could do Juneteenth. Okay, that's fine. I mean, you got to get the holidays somehow, and you know, some people argue, well, is that a significant enough thing? Because it wasn't like where all slaves found out that they were free. It was just those ones in Texas. Whatever. My only problem with the holiday is that Juneteenth is a stupid name for a holiday. That's my only problem with it. It's my only problem with it. You know? But if I can get another day off, that's the problem, right? Is that if I didn't get it off. But if I could get another day of the year off, that would be great. Whatever. You make whatever holiday you want. I don't care. I don't care. You know, but what's the point in having a Pride season if I don't get it off? Uzi wants the markets to stay open, huh? Well, it's going to be interesting because volumes are definitely down, but we do have fairly important news, economic indicators to look at in an hour, right? So I am curious, though. The volume in the so like come over here and look at Alice, man. Okay, what is Alice saying? Don't trade this. Don't trade this. Like anything under 5,000, 5 to 10,000 is like low activity levels, right? That's really terrible. Alice is saying don't trade. But look at the treasuries. The low was 115 and we are at 126. So we've had about 10K amount of buying here through this. It's quite an aggressive move in reality. So there is apparently some sort of a meta order buy coming through the market that I was definitely not expecting. So that combined with I was kind of not apt to trade anyways kind of means that I kind of sit on the sidelines here. I guess when I see something like that, I shouldn't be like, well, I guess I'm not going to trade it. I don't have to look at it. Probably should mean I need to get even more keyed into what's going on. It's just, I got to be a little bit careful with that because then I want to take a trade, right? And I don't actually know what's going on right now. So keep an eye on that. There's something off with my camera. I think it's because the Windows size. I'm gonna... Oh, you know what? That's not right. Well, that still doesn't look quite right to me, but to make it better, I think I would have to like pull it down. Is 250 ISO? No, 125 is the base. I'm pretty sure that 250 is the second one. I don't know. It just doesn't look right to me. My arms look so weird. They look super skinny, but they're also kind of bulging. I think it's the cam. I think it's the guy. I think it would be better if I had if I was able to get 50 to work. See, like this would be 50. See, it looks better. Base looks better at least. But I think that's a little too close. So my new squawk has just noted that there is some buying here this morning, and they only noted that there's a Federal Reserve meeting this week. So I guess they're tying it to that. I should note that it seems to me like even though a flow did come in there, that the market like moved on it a little. It was a little bit more sensitive. So I think that the liquidity is still a little light. I mean, look at, there's only 1500s being put out there. So there's not the same liquidity that there usually is. That's maybe why that move pushed them as much as they did. Uzi hates days off. Me too, actually. No, I love days off, but I don't like vacations. Right? Like if I get a day off, I would rather come in and study. What we need to do is we need to work hard and make the channel super successful so that we can just have every day be a study day. No. That would be very good for me, actually. Maybe not. I need a business that would require me to work with people on a daily basis. And all of the jobs that I could think of where I would do that sort of a thing, I would probably suck at. Right? You know, like I could be a hairdresser. So I'm trying to adjust the volume here. There we go. I could be like a hairdresser. I don't think I would make a good hairdresser, but at least that would give me an opportunity to talk to people. I honestly, I don't know. There's things that are really nice about how everything basically moved to work from home. Like getting that hour and a half, 90 minutes or so back out of my day is like a big difference, right? But there was real advantages like socially and culturally from having people in the office. And I ate better too because I'd eat out for lunch. Any chance you could explain one more time what do you see in the columns on the S&P? Well, sorry, do you want me to explain what the columns are, or do you want me to explain what I'm watching for on the DOM? I guess I can do both. That explains your ego explosion, significantly less in-person socialization. Yes and no. You know what? From my view, from my view, it's well. So what I see is when people want to argue about like basic tenets of things, right? And in my opinion, we have less of that now than we did like before 2020, right? Like on 2020, before 2020, there was some people that would come into chat that just didn't get it, just didn't want to believe, and it was like arguing to a brick wall. It was like, here's all of this empirical evidence about this one particular thing, and they're like, I don't care, the technical analysis works for me. Okay, fine, go wait. Then we don't need you here. That, you know, you're not helping anybody. That was a lot. Now it's, you know, we kind of went through a period of that, and then the people that we got here are more so people that have been attracted to that idea and are here because they buy into the empirical evidence and the approach, you know. Maybe I'm a little meaner about it, but I definitely will approach things on a stream different than I might in real life, right? Anyways, I was gonna bring down my little pen here. Shall we do that? That'll make this more fun. Okay, so this column right here that you got, this blue column, those are bids. These are offers. Okay. What are bids and offers? Those are limit orders. Limit orders to sell, limit orders to buy. Okay. Which one is it there? Okay. This column right here are market buys. Market buys, market sells. Oh, I'm not Sheldon. I could do that if you wanted, though. I know how they do that. The Sheldon formula is actually really simple once you understand it. Okay. So one of the things that happens in here is that this like number of orders right here, like right now it says 295. Okay. If we ticked up and we stay there long enough, that you can change the setting. Oh, that's weird. What I'm seeing on my screen and what you see are different. That's a little weird. We'll do it that way. Okay. Okay, so there's a refresh number. So if it goes up and it stays up there for long enough and then it comes back, this number will reset back to 0. Okay. So what this event it basically shows you is how many orders it took to clear the price is kind of what I'm looking at. So when I come over here in the treasuries, like, look, there was an 1835, but then beyond that, 400, 300, 183, 119. Now, the thing is that it can go multiple times, you know, like it might tick up, tick back down, tick up, tick. And so what I see left behind there may not be an accurate reflection of how many orders the latent liquidity, because it traded that many times. But in this situation, we had a trend up. So what happened? We had an 800 traded, and then it trended through very easily, and then 1835, and it trended through very easily. So you've got somebody is buying up large blocks of the stock, and the market makers are just jumping out of the way completely. Okay, so this is kind of what I'm looking for in the DOM, is like, do I see a persistent imbalance in the market buy orders compared to the market sell orders? And then how does the liquidity react to that volume? Does the liquidity, you know, like if we came up to 07, there's a big order right there at 07, right? Does it just slam through that right away? Are they like really anxious to trade that volume because they're afraid that there won't be more liquidity later? Or are they, you know, does it take time to go through it? Do the orders pull, right? And these are all kind of just small little, I would say like tea leaves, I guess you could say, that kind of tell you what's going on. And then as you watch those things over time, that gives you an idea of what the latent liquidity is in the market. Okay. And what I'm trying to determine is two things. One, is there a large meta order being executed? So if I think that they're going to come in and they're going to sell, I expected them to sell this morning. They didn't. But if they came in and sell, I'm expecting them to sell. Am I seeing that sell side imbalance? And then the second thing that I'm looking for is the liquidity conditions. What is the latent liquidity in that area? Is there a lack of latent liquidity in that area? Because if there's a lack of latent liquidity in that area, it can result in price staying there in that area for a little while, right? Versus if the liquidity looks healthy, that's good liquidity that the market, the meta order buyer or seller, whatever, is gonna smash into and move things with. Okay. The only formula I know is overlaying laugh tracks on garbage shows to make them undeservedly popular. I don't know. It seems like they don't really use laugh tracks in any shows these days. Is there a current show out there that has a laugh track? No, I just want the regular pointer. Well, yeah, but Big Bang Theory isn't on the TV, is not current anymore. It's over. I'm talking about like what's a current sitcom. I don't know if there are any. The sitcom like basically died. Like Big Bang Theory was the last major sitcom, right? Okay, but so here's the Sheldon formula. Okay. That will bring up some situation. They're talking about some particular thing. Maybe they're arguing about something. And the other person will use some sort of figure of speech, and Sheldon will take it literally. So that's almost always how it starts, is they'll bring up some figure of speech, and Sheldon will take it literally, and then they're exasperated because what they're trying to do is they're trying to tell Sheldon that they don't want to talk about it, or that they're not interested, or that he's wrong. And they're trying to do it in a nice way, and he doesn't see it. So then they become more overt, and they present their argument to him, and their argument is almost always based on some sort of emotional desire for Sheldon to just shut up, and Sheldon will always stick to the particular logic point, which is what I tend to do. But they'll say, well, that doesn't make any sense because if you follow that logically, this would be the result off of it, and that's silly, right? That's and almost every interaction that you see in Big Bang Theory is off of that. It's either Sheldon pointing out some sort of misunderstanding of a figure of speech, or pointing out logical fallacies. And it really all comes down to people don't necessarily want to like outright say what they want to say, right? They try to not be nice about it. And for an autistic person who doesn't understand any of that, it just goes over his head every time, right? Because Sheldon is intended to be a high functioning autistic person. So the formula for that is quite easy. As opposed to the speculator Seth formula, which is, hey guys, markets are statistically efficient, but not informationally efficient. Here's all the information that we have about that. And then somebody says, but I would rather believe in voodoo magic. And I go, why? Why would you want to believe in this voodoo magic when you have all of this scientific data that suggests a certain way of doing things? I don't get it. And then I spend 90 minutes complaining about why people don't believe or understand. Well, the thing about Big Bang Theory is that if you are a a technical person at all, if you're an engineer of any sort, then your kind of logical thinking centers and problem solving centers are pretty strong, and all of that kind of stuff is funny, right? If you're not one of those people, and all of your facilities in your brain are geared more towards the social interactions, then you see the funniness behind the social interaction side of it. And so it ends up being funny for both kinds of major groups of people. But then there's this other thing, which is like, some people just didn't like the laugh track formula, right? Which was a large section of people, and that's why the sitcom kind of went away. So they were like, this is not that funny, and they're just trying to convince me to laugh by having everybody else laugh. It really was like the last great sitcom, though. I can't think of a sitcom show that was as funny as that since then. You know what? I never, there's other than like the all-time great skits from Saturday Night Live, and maybe it's just that ever since I've been old enough to watch that show, it's just been bad. But outside of like their best skits, I find most of what Saturday Night Live shows grating. Like, the comedy is an interesting thing because it's kind of like when there's something wrong about a situation, that's kind of what makes it funny. That's what I think is so weird about comedy is that it's the contradictions that make things funny, right? So you have to come in and do something that's really silly and wouldn't actually happen in real life. But that also means that you get a chance to poke fun at the social order and the way that things are, right? And the Saturday Night Live view of the world these days, it just isn't funny. I feel like that they really miss the essence of a lot of what's going on these days, you know? Yeah. Like, people only like it because they associate it with a higher intellect. Well, that's certainly the case with that's certainly the way that a lot of Rick and Morty fans think about things. But I mean, look, there when you do something highly technical and you try and talk to anybody about it and their eyes just glaze over, you get to a certain point where it's like, okay, so like when it comes to science stuff, so Rick and Morty is kind of like a science fiction, science-based show. And so it is very much a thing that's like you're in a certain group of people that think a certain way if you're in that. And now the problem is if you think that makes you better than other people, that's not. It just means that you've wired yourself to be efficient at that particular type of thing. It doesn't make you better. Like, really, the reality is like what makes a person better than another person it's like a silly thing. There's really no such things. There's just people are just different. Okay. But then there's this other side, which is like the social order side of things, right? So there's this other kind of thing that goes on where people say, look, we're in this higher social class and you're not in this higher social class. And because we're in this higher social class, we understand these certain things and you don't, and ergo we can think it's funny. Now that stuff is total bullshit, because what I have found to be the case is that the so-called simpletons at the bottom understand what's actually going on way better than the people at the top. That the people at the top, their view of things is so skewed that they really just don't understand what's going on at all. And so then you get this social commentary that is just retarded. It's just not real to the real world, you know? And I see a lot of that. I don't know if that did that. Well, here I'm gonna mess with my camera while I wait for it to see if you say anything about that. There. Rick and Morty fans are more annoying than the show itself. Well, I don't. There's something about the fandom that. Well, no, you know why that is because you don't like your. It's the neurodivergence that you're probably picking up on. So I'll tell you something that I'm hypersensitive to and that I pick up on very, very quickly is you get all of these people that will say, oh, I'm like a really accepting person. I want to accept everybody and I'm a really open and accepting person, right? And then as soon as somebody comes along that's even slightly neurodivergent, they kick them out. They ostracize them almost immediately. And once you are able to identify neurodivergent people well, and if you're neurodivergent, so it certainly gets easier, but at this point, being 37 now, it's basically to the point I go around and like within 5 minutes I pick up on it and I'm like, are you ADHD? I can see it. And I can see that those people will get ostracized from a group very quickly. Like there are and there is, like, some people are really open and some people aren't, but most people aren't, and they pick up on the neurodivergence and aren't interested in talking to them. Almost they get rejected almost immediately. So you're seeing something going on in society right now where particularly the autistic people are being really mistreated and abused to some extent, I think. So what will happen is when you have like something weird, like let's say weird ideas, right? You could sit down and say, well, okay, most people should be able to, so like the one that I think is the most serious is the transgender issue. So you can come in and you can say, look, some people, there's a quote unquote spectrum with gender, and you would think most people can kind of sort that sort of a thing out, but the reality is that the most vulnerable people in terms of mental health actually don't. And the people that are the most vulnerable in that respect are autistic teenagers. Okay, and so an autistic teenager is very, very prone to finding something that is weird or unique and kind of gives them that dopamine for whatever reason, and it can be positive and negative things that can create that dopamine, and then they will just get attached to that for the rest of their life, right? and you can attach yourself to something that's not good for you, right? And so I'm just seeing things over and over again where the autistic community is kind of at the negative end of some of the cultural changes that have been happening over the last 10 years. And I think that may be a part of why, they're saying like so many more people are being diagnosed with autism. Is it because we're better at seeing it? Is it because there's something environmental? Well, trying to prove those sorts of things scientifically is very difficult. Unless you can find the environmental thing and show that it's causing autism, which I haven't seen yet, okay? But personally, I think that what's happening is that the autism is becoming more apparent because of the social issues. Essentially. Like the mental health of autistic people is worse because of the social issues that we're having. Social media makes the mental health of autistic people worse. They're more likely to spend a lot of time online and to be engaging in behaviors that eventually ends up being negative for their mental health. And I don't think that Uzi is autistic or ADHD, and it probably does pick up on that. And you're just like, you don't like somebody for, you can't even really tell why. A lot of Rick and Morty fans are autistic. Well, the treasuries did kind of pull back from those highs and are just kind of chilling here at the 04. I think that still sets us up for a situation where we could have another leg of meta order. But we have that news in about 30 minutes. So I'm going to guess that they probably aren't, unless somebody's going to like really, really move, really take a big trade going into that, which we have seen a lot of. At least last month we saw a lot of front running those pieces of news. Do you think it could happen again this month? That seems a little, I don't think so, but I don't know why I feel that way. Watch me be wrong, and then I'll start coming out with all of the conspiracy theories again, right? I'm just looking around, seeing if there's any like news or other interesting things that Oh, I missed this from Mohammed A. El Arian. We're making the big banks bigger, says El Arian on JP Morgan buying at First Republic Bank. We're changing the conventional wisdom about what is a safe bank. It turns out the banks that were once viewed as too big to fail are now the safe banks. We have increased moral hazard. Yes, yes, we have. We have increased moral hazard. I think for these people that back in 2008 were sitting there screaming about moral hazard, like everybody that talks about that, there's always like a fatalistic kind of undertone to it, It's like, well, I'm going to warn you about it, but I know that you guys aren't going to do the right thing because all of the incentives behind the system are screwed up. it seems like I see a lot of that, like when you talk about the deficit and the budget and taxes and all of that sort of stuff, I have zero confidence that they will ever fix that taxes will ever really be what they should be, that government spending will ever come down to what it should be to ensure like maximum freedom and prosperity. I don't think it will ever be that way because the incentives are just all set up towards Congress doing the irresponsible thing, towards the government trying to take even more money from you. They will reduce income tax brackets. I am of the mind that okay, so here's one idea that I see on this subject. They only switched to yuan in international trade with China. So yeah, I don't think that it will have much impact on yields or currencies at all, no. Okay, so one of the ideas that gets pushed by libertarians a lot that I think is a terrible, terrible idea is a consumption tax. They think that on a state level that sales taxes work great, and so we should just have a national sales tax on everything. It's a terrible idea. Okay, you want to increase the amount of like buying and consumption that people do, not less. And when you tax something, you can get less of it. So like that, the worst thing that you could do would be to go and tax the thing that the economy is premised on. Terrible, terrible idea. Okay. Now, so then you come to the next level down would be like a fair tax, right? So a fair tax would be 20% income tax across the board. It applies to all income, no matter what, period. And everybody pays the same rate. It doesn't matter how much you're making. Okay. So we have a progressive income tax, and there is actually a considerable amount of research out there that suggests that a progressive income tax is beneficial economically. And that's that's part of why the United States has such a progressive income tax system. Okay. But I would argue that, well, it is better for you economically, that it is not better for you in terms of being responsible with the money, right? Because when the money is basically all coming from only a very small subset of people, then really only a small subset of people is really concerned with what Congress is doing and how much they're spending. Like the average person is not, I mean, you might from like a philosophical framework say, oh yeah, we shouldn't have too much spending, or we should keep the size of government down, etc., etc. But it doesn't affect you personally. It's not like your life is dramatically affected by how much income the government is bringing in, because most people don't even pay income tax, really, right? Like 53% of people pay no income tax whatsoever, right? So when you do that, you basically get this group of people that, whatever the government does and however much they take out of the economy, like they kind of benefit from it to some extent, right? So if you want to have a fiscally responsible government, I think that you need to force everybody to pay. Like what I would do, I would keep a progressive income tax, but everybody would pay something. Everybody would pay. There would be like a minimum tax of 5 to 10%. That even the poorest people would have to pay 5 to 10%. Okay, that would be the first thing, and then it's progressive from there. And then the second thing is I would abolish your taxes being taken out of your paycheck at payroll. Okay. So you could set something up where you pay a little bit on your taxes every month to the government, but it will come out of your bank account. It won't come out, before you get the paycheck instead. So because when you do that, it's out of mind, right? If people had to pay the tax just at the end, the end of the year, and then all of a sudden, I have to pay 10% of my income to the government. Now, all of a sudden, you're a lot more concerned about what the government is spending and what the tax rates are and so on and so forth, right? We need to adjust the system so that, the microstructure of it is such that the incentives for the people are to do the responsible thing. Right now, it's not. Right now, it's the opposite of that. Let's see here. What's this by Joseph Wing? The weakness of First Republic was similar to Silicon Valley in its high reliance on a flighty deposit base, which it reportedly built by offering sweet mortgage deals. First Republic Bank wasn't an extreme in its reliance, but it had the bad luck of being based in SF, I guess San Francisco, and thus lumped together with the Silicon Valley Bank. So SVB and First Republic were definitely, so here he's got a chart here showing you percent of deposits are uninsured. So the next biggest ones are BMO and Huntington, and then you get significantly further down. So could this continue through? I guess if we are with that, I would expect people to start talking about who the next one is later in the week, right? The bankers running the sale process for Subway have given the private equity firms vying for the sandwich chain a $5 billion acquisition financing plan, hoping to overcome a challenging environment for leveraged buyouts. Somebody's gonna buy Subway? I tell you, it really feels like almost like a disease going through the economy. I think that the reality is that these weaknesses were always there and the monetary policy was just kind of hiding it from us. Yeah. Like I saw a thing this morning from Chamath on his podcast, basically, where he was saying that peak tech is happened. I think he's right. I think that we've seen the height of the power, influence, money, etc., coming from big tech, and they may continue to see their valuations rise and so forth because they have really high cash flow coming through them, but it's going to change, and some of these companies are not necessarily in the greatest health. Like, they're not innovating, they're not providing really good products and so forth, and then the tech industry overall, just in 2022 rather, just got demolished. I think you're gonna continue to see a lot more of that. If the flows play out in the month of May the way that I think they are, it's gonna be really funny in retrospect. Remember this day so we can clip it in the future, right? Because we had some crazy buying in tech last week, and I'm really concerned that those people are buying the top, and from here the flows for the rest of the month are gonna just be down, down, down. I guess it depends very heavily on what happens on Wednesday with the Federal Reserve, but I still think there's very good reason to be concerned about that. It looks like the impulse from the monetary standpoint in terms of which way the balance sheets are going and where the money is going to be flowing, that there's going to be money tightening this month and that it's going to hurt the stock market. Okay, so here's something interesting to talk about. Nate Silver. I think dismissing worry/excitement over AI as media hype is getting it wrong. People who know the most about it tend to be the most worried/excited, which is very much not the case for most media hype cycles. And it's a called shot, something they've been worried about for years. So I don't think that's entirely accurate. The president of OpenAI is talking about it and seems concerned about it. Okay. Elon Musk is talking about it and he's concerned about it. When I look at like the machine learning engineers that are like doing this stuff every day, they're not really all that interested in talking about the doomsday scenarios, right? I think maybe part of it is that they understand the limitations of the current models. I think that what ChatGPT can do is like really way overhyped. It is a text prediction algorithm with reinforcement learning in there. It doesn't do logic, it doesn't do planning, and it would require some pretty significant algorithmic innovations to get it to do those sorts of things. And so that sort of level of an AI may still be 10-20 years away. People are talking like the singularity is going to happen next month. Nah, I don't think so. But also, and I've discussed this before, but I think this is a key thing to keep in mind for the AI revolution, because this is going to impact where you should put your money. Okay? This stuff is computationally expensive, right? And you would say, well, yeah, but the hardware will continue to get better, not at the rate at which the computational needs are increasing. So like when you look at ChatGPT, you know, the ChatGPT 4 is like 100 times bigger than ChatGPT 3. That means that's like 100 times more resources that it ends up using. And the computational resources to train it are immense. They are immense. And those requirements are just growing faster and faster and faster. So this is not something that any regular Joe can just come and run on their own computer. To make some of these models, you really need like the big computing resources, and you need a lot of infrastructure too, by the way. Funnily enough, all of this AI stuff has not improved the machine learning operations pipelines. Right? I think that what you're gonna find in a couple of years is that they pulled the Uber on us, right? They come in, they offer a really, really low price, and that, you know, gives them a lot of market share, and then they have to become profitable, and so they adjust the price to what it really should be based on the expenses, and you find out that AI is really expensive. Like you're gonna have a lot of you're gonna see a lot of situations where it will be cheaper to hire the human. Computational resources for the robot will be too much. So, and then you look at that on all sorts of levels, right? So like the machines are generally will give you more power, but they're not as efficient, right, as biological equivalents. Any levels to look at today? Well, so I think that the S&P 500 is still like well above like the really critical gamma levels, so I don't know if there's anything too big for us to look at there. I think that today is going to be a lot more about just watching what these PMI numbers come in at. So that's what I would be focused on. And that there is some sell flow in the treasuries. Yeah, in 15 minutes. Yeah, manufacturing PMI. That's going to be important. Both the one that we get at 745, the S&P. So remember that there's a US S&P manufacturing PMI, and that number is kind of like last month's data that we already have. US ISM manufacturing PMI is like the most forward-looking PMI that we have. So the one that we get at the top of the hour is really important. That could set the pace for the rest of the month, frankly. Me thinking about efficiency, it just has me thinking about how I'm going to be wheelbarrowing a bunch of gravel to my backyard by hand, which doesn't seem like the most efficient way of doing it, but it's the cheapest. It's the most cost effective, but it's going to do a number on me, I think. I worked so freaking hard on Friday getting everything ready for it. I was so I haven't slept that hard in a long time. Gonna come over to Zero Hedge here and see what their top stories are. JP Morgan CEO says system is very, very sound after second largest US bank failure in history. This is getting near the end of it. Why would you say something like that, Jamie? Why would you say something like that? I would say that at the moment there is no evidence of some sort of systemic failure or like the next shoe to drop. But that doesn't mean that it's not out there. It's just not visible to us at the moment. L. Arian warns of collateral damage and unintended consequences of JP Morgan sponsored buyout of FRC. I tell you what, this FRC thing, this is one of those things that like when it happens, nobody really talking about it, but then later on, you know, people will be talking about it for years and years and years about how dirty of it, you know, the conspiracy theorists are going to go crazy with this, right? Because the banks basically were able to get the government to take all of the losses and then they got all of the good assets. That's what happened. Went into receivership at the FDIC. All of the bad assets were wiped out by the FDIC, and then JP Morgan gets to take the good stuff. That's what happened. Got some gunk in the back of my throat I'm trying to get out, and it's not coming. Okay, that's a little bit better. Okay, let's read this story. Crowding out. The Fed may be killing private sector to save government. The Federal Reserve's balance sheet reached its all-time high in May of 2022. Since then, it was supposed to drop at a steady pace and shed $3 trillion by 2024. The normalization of monetary policy was built on the idea of a soft landing for the economy. However, the Fed may be killing the private sector to save the government. Curbing inflation requires significant reduction in the money supply and aggregate demand. However, if government deficit spending is left untouched, the entire burden of normalizing monetary policy will fall on families and businesses. The current situation is the worst possible. The Fed's balance sheet is not falling as fast as it should. Government spending has not even been scratched, but the money supply is falling at the fastest pace since the 1930s. And rate hikes are hurting the productive economy while the government seems unaware of the need to reduce its bloated balance sheet. The first quarter GDP figure is extremely concerning. Government spending showed yet another big rise at plus 4.7%, much higher than expected. However, consumption at 3.7% annualized was well below estimates and driven by a worrying new record in credit card debt. Even more concerning, gross private domestic investment fell by a massive 12.5%. There is robust evidence of a negative trend in the real economy. Rising federal expenditure, more bureaucracy, higher taxes, and weaker activity in the part of the economy that drives growth and jobs. Rate hikes have two direct negative effects on the economy if the government does not reduce its deficit spending spree. They may mean higher taxes and a massive crowding out of available credit. The government deficit is always going to be financed even if it is at higher rates, but this also means less credit for businesses and families. The crowding out effect of the public sector over the productive economy means lower productivity growth, weaker investment, and declining real wages as the government keeps inflation above target by spending additional units of newly created currency. But the productive sectors find it harder and the more expensive to find credit. Additionally, the government borrows at a much lower cost than even the most efficient and profitable businesses. It is impossible to achieve. Well, okay, so now they're really... I thought everything that they set up until here was good. It's impossible to achieve a soft landing for the economy when the Federal Reserve ignores the signals of the banking system and the real economy. Is it really the Federal Reserve? The first pillar of a true soft landing must be to preserve the real disposable income of the workers and the job creation and investment capabilities of business. When the government continues to increase spending, there is no signal of the mildest budgetary control, and the entire landing comes from the private sector. What we get is upside down economics. Well, it does seem, I do agree that it seems like, at least right now, that it is coming from the private sector. And it is hurting people, for sure. Federal Reserve, but I don't think that it's the Federal Reserve is the problem creator here, right? Federal Reserve is paying attention to money aggregates just as the money supply is contracting at an almost historic pace. Even worse, the money supply is contracting, but federal deficit spending is untouched and the debt ceiling was raised again. So what, you want them to continue printing the money to the detriment of everybody and have crazy inflation? That's just as bad, right? It is impossible to grow with rising taxes, persistent inflation, a tax in itself, and carrying the entire burden of the normalization of monetary policy. Fighting inflation without cutting government spending is like reducing weight without eliminating fat. That's true. That's true. We are going to have to see a reduction in government spending for sure. They have a picture of Powell there that's, I think, a really good picture. They've combined two famous pictures of him together. U.S. recession probability reaches 67%. Really? Wow. So just kind of taking a look at the market, there has been some upside here in the S&P 500. Still relatively contained though. 10 point up move so far. We'll see if they try and pull out another crazy move here. Treasuries have settled in the middle of this range that they've established. and the metals complex have decided to just find a place to chill up towards their highs. So gold is back above 2000, actually at 2015 at one point. I should say they got as high as 2015. Biggest winner today though, silver up 2.76%. That's a big move. Like gold is up 0.64%. Silver's up 2.82%. John Reed Stock, don't know who this is, but he says some argue that when the SEC approved Coinbase's IPO, the SEC also approved Coinbase's business. What a crock. And possibly a criminal offense. Yes, you read that correctly. A criminal offense. Having served as chief of the SEC Office of Internet Enforcement for 11 years, in my opinion. This safe harbor defense that the SEC somehow ratified its Coinbase's business operations is a surefire loser. Don't shoot the messenger here. I just seek truth column as I see him, and I am most often an SEC critic. I am 100% independent, objective, and neutral. I have no stake in the outcome of any crypto litigation or investment. But let's be clear, the SEC's role when approving Coinbase's registration statement was merely to ensure that Coinbase made the proper disclosures in their application. That's correct. To suggest that the SEC somehow endorsed or approved the various lines of business of Coinbase, so Coinbase now has some sort of regulatory safe harbor for everything they do, and the SEC is limited by some sort of doctrine of regulatory estoppel barring them from charging Coinbase has no basis in law or fact. Merely because 2 years ago the SEC reviewed Coinbase, has it really been 2 years? Registration statement and approved Coinbase to go public is irrelevant. The same goes for any public company that has ever filed a registration statement with the SEC. Federal registrations of security offerings requires the issuer of the securities to disclose all material information relevant to an informed investment decision. Coinbase met the basic standards for disclosure in its registration statement, which was filed and approved by the SEC. Wow, this is like way too long for this guy to explain like a really simple concept. And then he links to another article. Why Coinbase will lose its battle with the SEC, Wells Notice edition. This was on March 23rd. For Coinbase, it's SEC showtime. According to Coinbase, the enforcement staff of the U.S. Oh, here we got the news. Sorry. I'm not going to trade this. I'm not as interested in this one, but we do want to pay attention to what we get here. Okay, so lower than forecast, but still above 50. 50 spot 2 versus 50 spot 4. So just a small difference. Market doesn't seem to be reacting to it at all. Although the liquidity is pretty light at the moment. Okay. According to Coinbase, the enforcement staff of the U.S. Securities and Exchange Commission wants to charge Coinbase with violations of U.S. securities laws related to assets listed on Coinbase's crypto platform and Coinbase's staking and wallet services. This should come as no surprise. Coinbase has remained defiant and has time and time again dared the SEC to sue them. My view remains and has been for quite some time that Coinbase's operations showcase a veritable driver's ed film of securities laws violations. Per a March 22nd SEC Form 8K, Coinbase reports that the SEC believes that the SEC's potential enforcement action against Coinbase would relate to aspects of the company's spot market. Blah, 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 blah. Yeah. Rather than respond to the Wells notice privately, as most companies would do, Coinbase, as per usual, instead immediately went into full offensive mode and laid out their defenses on Twitter and elsewhere in an attempt to rally the mob and publicly shame the SEC into backing off. No, that's not what's going on. They're going in rallying the mob because they don't want the price of Bitcoin to drop, because if the price of Bitcoin dropped too far, Coinbase would be effed. For whatever reason, Coinbase believes the Twitter rant against the SEC, who will never respond unless it is with a lawsuit, is the best way to do battle against the Wells notice. Not only are Coinbase's arguments weak, misguided, and more akin to public relations than legal positions, but Coinbase's argument are also proven failures of crypto mumbo jumbo and ludicrous John Dice rhetoric. That's not a word I see very often. Leading with their 4 typical talking points, Coinbase asserts the SEC approved our business and now is going back on the world. That's wrong. We met with the SEC and the SEC would not work with us. They are not required to work with you to bring you into what is the word I'm looking for? Bring you within the regulations. We need regulatory clarity because the SEC is stifling innovation. No, if you are selling unregulated securities, then you're selling unregulated securities. And they're not going to make some special exemption for selling unregulated securities just because it was done over the blockchain. This is another instance of the destructive SEC practice of regulation by enforcement. He's right. Their arguments are dumb. Looks like the S&P 500 waited for that number to come out, and then it was like all clear to buy after that. Okay, now here's an interesting part. There already exists regulatory clarity relating to crypto, they say. Coinbase's pivot to the tried and toothless refrain of berating the SEC for lacking regulatory clarity in its actions is farcical and flat-out ruse. It's like Elizabeth Holmes and Sonny Baldwin blaming the FDA for bogus blood test results from Theranos' counterfeit blood test machines. Despite its pervasiveness and bluster, the Coinbase tagline calling for regulatory clarity is noxious red herring and complete disregard of the management's fiduciary obligation to its shareholders, intended to sidetrack and dissemble the plain truth that crypto exchanges flagrantly violate bedrock principles of securities regulation. The regulatory clarity and SEC hit pieces are an impulsive and frantic attempt to appeal and co-opt fundamental notions of fairness, liberty, and freedom. Securities regulation is not meant to be precise, but is instead intentionally drafted to be broad and all-encompassing. Clarity is not just uncommon, it is deliberately avoided. Second, though securities regulation is primarily a principles-based legal framework, there already exists extraordinary regulatory transparency regarding crypto. Although crypto industry constantly grouses for regulatory clarity, whenever any specific regulatory crypto-related rules are promulgated or proposed, the crypto industry cries foul and almost instantly files a flashy legal challenge to its enactment. Thurgood Marshall, the fundamental purpose of the undergirding the Securities Act is to eliminate serious abuses in a largely unregulated securities market. 100%. 100%. In other words, the existing laws should count to crypto too. 100%. Yeah. It's like you can have crypto tokens. You just have to do the proper securities registration first. And the only reason that you're not going through that process is because you don't want to disclose that stuff to people, because otherwise you wouldn't be able to make money, because everybody would see that it's a pump and dump. Yes. Oh, this guy is like super. Now he's just going through all of the things that I talk about. That, you know, all of the problems with cryptocurrency in general. It is easy to imagine a world without crypto, and if crypto disappeared tomorrow, nothing would change for anyone except for criminals, who would lose their most effective felonious device and instantly suffer immeasurably. This guy uses some words that I'm a little bit like, why? How do you say that? Felonious? 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 I understand what the word is, but I've never seen that. Like, what? Felonious? You think it's felonious? The most effective felonious device and instantly suffer immeasurably. I don't know. This guy is... He seems like a smart guy, but you know it is? Okay. He seems like a smart guy, but he also seems like he's a little cares a little bit too much about this issue. I wonder what his deal is. I mean, he's writing this huge diatribe against them that I could never write. I mean, if I wrote something about this, it would be half the size of this guy's thing. Oh, he was the former chief of the SEC Office of Internet Enforcement. Gotcha. Okay. Getting sleepy with this market? I tell you what, the treasury market has not been too great, has it? I mean, it did come down, but sure makes me wonder what that buying was. Because that still seems like everything else has been what I expected, but that big thing it did, that big buy at the beginning doesn't quite fit. CFA Institute has a handbook of artificial intelligence and big data applications in investments. I will have to read that. Let's see here. Does it give it to me? Oh, yeah. Read the full book. Is it a PDF? It is. I will try to remember to read that today. Actually, let's put it in the machine learning one. Oh, I didn't know that Bran is on LinkedIn. I should add him. Let's see here. Will it let me? Connect. Okay. Here's what Brannigan Barrett has to say. If you can't be profitable with a $1,000 trading account, you definitely won't be profitable with a $100,000 account. Over the past 18 months, we have seen a surge in trader funding programs popping up all over the internet. It's simple, pay $250 to take the test, and we provide you with capital, no strings attached. Reality is the odds of you passing are 5%, yet thousands of traders seem to believe that capital is the only thing holding them back from success as a trader. Oh, and then he has a video on Vimeo. Well, I totally agree with him. But why would you put that on Vimeo? It's only 3 minutes. Patience breeds performance. One great trade will not make a record year. 30 to 40 good trades put together is what makes a record year. Oh, I totally agree with what Brannigan Barrett just said there. That, like, ultimately the prop firms usually don't help you. And the odds of you passing are very small, and they tend to push you towards risky strategies. In other words, I think that the success rate of retail traders is lower than it otherwise would be because of the existence of prop funding firms, because everybody's trying to go for a strategy that will pass the combine, which is unrealistic. Okay, so we should switch gears here. We got about 90 seconds until we get the PMIs. So no, we're gonna get US ISM manufacturing PMI estimate 46.8, with the previous reading being 46.3. And then there's ISM manufacturing prices paid. They're looking for a reading of 49 versus 49.2. Okay, so both of those numbers are going to matter. Then we get there's a bunch of other stuff, employment index, new orders. Oh, we do have construction spending month over month. We're looking to have a reading of 0.2 versus previous reading of negative 0.1. But those PMIs and those prices paid. So like if, for instance, prices paid ended up being over 50, yeah, the treasuries are going to sell off hard, right? That's why I jumped from Forex to futures. I only took 1K of a 35K account. Oh, because of the problem. Okay, so they're pulling. That's a real pull, so that shows you that the market anticipates this to be a very important number, right? Ooh. Okay, so prices paid was, oh geez. Oh wow. Okay. So this is definitely a buy. Okay, so let me give you the numbers here. Manufacturing PMI was 47.1 versus an expected 46.8. So it was 0.3 higher. That's not too bad. But then US ISM manufacturing prices paid 53.2 versus an expected 49. So I said, you know, if that number was over 50, that probably the treasuries will tank here. Yeah, that is absolutely what happens. Oh, if I can't do it with 1K, I ain't doing it with 35. I don't know. I think that there probably are, if you have a lot of money, you can take on a lot of risk and you can probably be like just kind of okay profitable, but not like for it to be worth it, you know? So doesn't ruin the point, but there are some things that you can do with more capital that can make you more profitable, right? But the combines don't get you to that point usually. Yeah, with less money comes more discipline. I agree. I think it's kind of funny. You would think that having less pressure on you would mean it would be harder to be disciplined, but I find it to be very much the opposite. Like, because there's less pressure on me because I'm not risking very much, it makes it a lot easier for me to be very disciplined and not trade when I don't need to. Versus when I was much more leveraged, it was much easier for me to get emotional about it and go and make bad trades and do stuff that I shouldn't be doing. That way, when I did mess up, it was my own fault. So, where could this go to? Well, so I think the first kind of key level below us that I would look at is around the 20s, because that's when we start to get into like below yesterday's prices. So if we start getting below yesterday's prices, then we really got like a real mover on our hands, right? And I do think that seeing the PMI manufacturing prices rising, because remember, the inflation was mostly in the last few months, it was mostly coming from the services, right? And the manufacturing had cooled off. To see the prices rising in the manufacturing is like really bad. And that is about, I don't want to be overly dramatic, but that is just about the worst data point you could possibly get right now. I'm not going to say that 53, well, actually, no, I think 53.2 is like really high. I don't want it to turn it into like that's everything. Okay, but that's just about the worst data point I feel like we could get right now. Is something suggesting that inflation is rising again and that it's coming in the manufacturing sector. That's not good. That's something that I think dramatically increases the chances of the Federal Reserve having to continue raising rates even after the meeting this week. Right? It certainly doesn't suggest interest rates be at like 3.4, which is where we've been at some points last week, right? It's still going. I must say on this one, so when I get a move like that, I'm always a little careful, like, because you don't want that backwash to come in on you. Well, this time there was some backwash, but it was very brief, wasn't it? Like what? We went down to 24 and then we bounced back up to 27.5. So it went from there to there, and now we're going and already hitting new lows. That's very aggressive. Yeah, if I don't expect to be right on every trade, but if I'm wrong 6 times in a day, that's my fault. I should have been wrong only twice. Yeah. I really think that the big advantage to, is this the big advantage? Maybe it is. I think one of the biggest advantages to the order flow trading is that you get much better feedback from the markets about what you're doing, right? Because if you're really accurately predicting what the flows are going to be that day, you're going to see them come in, right? You shouldn't have to sit in a loser for very long. You shouldn't have to sit in a loser for more than 45 minutes, right? So what it really tells you. Okay, so after hitting those new lows, it did bounce back up to the 24 area pretty quickly, but so maybe a little bit of a hint of like the having the liquidity problems already. Flows are still negative though, so when we started before the news we were at 122 and we're now at 114. So that's like what, 8k so far? But I think there could be a lot more than this. And let's see here. We have, oh, you know, I forgot about this, but we have 6-month and 3-month bill auctions later today. Okay, so by the way, what were the other numbers? ISM new orders index 45.7. That's not good either. So remember, on these numbers, like 50 is even. So 45.7 is in contraction in new orders. And unemployment or employment was at 50.2. Okay, so employment hasn't changed much. I mean, that is about as stagflationary of a number as you can possibly get, yeah? So now is a good time to maybe go to Zero Hedge and see what they're saying about the different, analysts around there. But I say this screams inflation. Well, there you go. So their headline is ISM manufacturing screams stagflation, still contracting with reigniting inflationary pressures, quote unquote. Following S&P Global's manufacturing survey surprise jump in the flash data, the 50.4 print has dropped intramonth to 50.2. The ISM manufacturing print of 47.1 up from 46.3. Given the notable slide in US macro surprise index, Chris Williamson, chief business economist at S&P Global Market Intelligence, said U.S. manufacturing output has regained some encouraging momentum at the start of the second quarter, having stabilized in March after 4 months of decline. I'm going to try blowing my nose here again. Oh, I guess the short-term interest rate futures are now saying that there's 100% chance of an interest rate increase on Wednesday. While the upturn is linked in part to greatly improved supply chains, helping reduce backlogs of orders, April also saw a welcome upturn in new orders for the first time since last September. Although only modest, the rise in new orders hints at a tentative revival of demand, notably from consumers, but there are also signs that fewer customers are deliberately winding down their inventory levels. The brightening demand picture was accompanied by a lifting of business confidence about the outlook and increased hiring. The downside was a reigniting of inflationary pressures, with a stronger order book encouraging more firms to pass through higher costs to customers. Okay, so I said very stagflationary. It sounds like that business is getting better though. Okay. So stagflationary would be like less activity and higher prices. Well, I would say that it's still pretty bad activity, but slightly better than before activity, right? The S&P 500 is trying to shake this off and pull a buy out of this. The brightening demand picture was accompanied by a lifting of the business confidence and the outlook and increased hiring. The downside was, sorry, I already read that part. And that final line was confirmed by ISM with prices paid back above 50. So ISM screams stagflation, no growth, and higher prices. Let's not say, well, yeah, it is still a below 50 number, right? It is still negative growth. Yes, negative growth and rising prices. It is a stagflationary environment, one way or another. So for some reason, my NinjaTrader is not getting the 5-year data correct. So I'm going to reload the data on that one. Okay. Let's reset things there. Let's see here. Nick Timmeros, the Fed's Inspector General recommends the central bank apply new ethics and personal trading disclosure rules to more senior staff than are currently subject to the policies that were announced in 2021. Okay. Let's see here. Joseph Wang, it seems like there was a big panic in the venture capital community and the narrow set of banks that heavily relied on their business, namely SVB, Silvergate, Signature, etc., suffered, but those with a more diversified client base were fine. Oh, okay, sorry. Here was another thing from Nick Timmeros. Eric Rosengren, in remarks last week, said he would oppose a rate increase this week if he was still an active policymaker, given his outlook on the credit crunch. I would dissent at this meeting. I would not raise rates at this meeting. Okay. And we're getting quite a bit of a flat line here at 22.5. I feel like it was maybe a little bit too early, you know, I wasn't quite seeing the evidence of the whole, but them sitting there at those prices for this many bars suggests that that is what's happening. Something's wrong with my data because it is still, well, it says loading tick replay on my 5-year chart. So it's not sending me 5-year data for some reason. At least not historical chart data. ZF, it's not showing me ZF. I only got the bar, the bar when we moved down, and since then it's not showing me any data. Yeah, it is weird, isn't it? I guess it's not too big of a deal, but oh, that's interesting. When I was clicking, it was giving me the boom, boom. Like it was like there was some other window open or something like that. Let's see here. Gold giving up most of its gains. Silver, man, silver got creamed. Wow, they were up almost 3% at one point. Now they're only up 0.7. Oh, silver. That sucks for silver. I haven't gotten a tick in the micro 5-year for like 2 months. Yeah, occasionally I'll see something go through, but it's the volume in there isn't very good, is it? It's kind of funny how much activity there is in the 10-year compared to everything else. I mean, it makes sense. I think that you would need to have way more there's not very many popular retail trading strategies out there that are based on spreads, right? If somebody was selling a course out there that was based on trading spreads in the micros, then maybe it would be a more popular thing. But instead, most retail traders are just still trading the outrights. So you only really see activity in the 10-year. Okay, Fed swaps show around a 2 in 3 odds of a June pause after the May hike. So they're showing 66% no hike in June. Surely that's declining though, right? And the chances of a what we should say is the chances of a June hike is now up to 33%. That's what we should be saying. See, why did you phrase it that way? S&P Dow Jones Indices analyst Howard Silverblatt. Not Silverbait, Silverblatt. It's not an earnings recession. The numbers are good, but they're nothing to write home again. Yeah, I'm not. It kind of looks like they've kind of reached the extent, and it's going to have to pause here for a while if they're going to go lower. Well, spoos seem to be ignoring it, man. I wouldn't say that they're up too much since the news, but they're pushing highs, not lows. The Treasury saw a clear and sensible response to the ISM numbers, but the S&P 500 seems to be just completely ignoring it, as they have been wont to do for the past few weeks. I would have thought that some of those technical buying flows would have been a lot weaker today, so I'm a little surprised to be seeing it going up here. But like I said, it hasn't gotten crazy. If they start so they haven't touched 4,200 yet, right? If they touch 4,200 and then extend much beyond that, then I'm gonna be like, what? Something that you might see though is that they do touch 4,200 and then that's then it's all down from there. Something that I've seen them do a lot. It's like they have to touch the big number first and then they can go down, right? Let's see here. Joseph Wang retweets Ironside's macro. March construction spending report, private sector manufacturing construction up 62.3%, driven by the tech sector. My former colleagues at Barclays said would never return to the US. To be fair, we had those conversations 10 years ago, which is close to never for most investors. So they're pointing out that deglobalization is resulting in some manufacturing come back to the United States. Okay, and we got 2 ticks up in the treasuries there. And the equities made an attempt to push the 4,200 and got smacked down. Well, I mean, we got a pretty good move off of that news, but it's already kind of returning back into that really quiet market again, isn't it? And what time is it? It's been 20 minutes. dictatorship. We can't afford to let Biden, quote, finish the job. So Joe Biden's fear and greed index is at 62%. Yeah, nobody cares. There's an inside joke there with Lucas. No, Joe Biden's campaign theme is finish the job, and that just seems like a really poor strategic decision. That's like, yeah, we didn't actually accomplish very much in the last 4 years. Sorry. Give us 4 more. I promise it'll be better. Not to mention that that's just asking for sexual innuendo. Calling it right now. If Donald Trump becomes the Republican nominee for president, he will make a sexual innuendo joke about Biden's finish the job campaign slogan. You know it'll happen, right? Well, there's actually, okay, so I am seeing a little bit of like low latent liquidity here at 26.25. I mean, it's been sitting there for a little while, so of course I would see that. But I'm also seeing icebergs on both sides of that, so. There is still some liquidity out there willing to get filled in this area. That's the point. Yeah, it's a good point. ZB is at the lows, Octavius. There's a real steepener coming in here, isn't there? In other words, ZB never actually bounced, did it? It stayed down there the whole time. Clearly, that's why NinjaTrader is not showing me my 5-year chart. It's because they don't want me to notice how dramatic. But see here on Jigsaw, it works, so we're good. Question though is, can the 30-year drag the others down? Sometimes when we see that and the 30 years leading the way, that can be some pretty nasty stuff, right? Looks like they're backing off of it for now. Let's see here. Discovery Trading Group, S&P Global Manufacturing Flash lands above the sacred 50 handle for the first time in 6 months. Good news, bad news, fresh inflationary data, any way you slice it. Broken record at this point, but I still think that portly women may just be clearing her throat. Are you saying that inflation is fat? Are you saying that inflation identifies as a fat woman? That's kind of what it sounded like he said there. Oh, wait, what's this? Oh, that's the stuff that we already read. You did like math? I guess. Body shaming the economy. I think there's a possibility of it going a little bit lower and that the 30-year may yet lead the way, but for the moment, it doesn't look like they're ready to go. I was reading an interesting paper on estimation of fair price from Stoikov. Has some formulas, but his concepts are really nice, not useful outside of HFT though. Well, I would never say that. Right? Because if it's relevant to the HFTs, then that can help us understand why the HFTs are doing certain things in certain instances, and that can in turn end up being useful to us. Right? Okay, so it looks like there was another tick there. No, the 30-year came up with it, so that may have been just a slight bit of flattening back out. Wow, GM cuts several hundred contract workers over the weekend. That's not good. Yeah, but do so. That would be good. What year was it from? I'm feeling sleepy, man. This market's putting me to sleep. I don't like to be feeling sleepy when I've got, you know, a little bit of profits coming back on me either. It seems that the S&P 500 has backed off from those highs for now. They haven't been able to push the other side either, but treasuries look like they're trying to give everybody the squeeze. Yeah, I don't know. I haven't seen like a really meaningful downtick in a while over here in the treasuries, but if they get back to 25.5, that might do it. I mean, it's slow, but volatility is actually the low volatility is actually nice. Enjoy it while it lasts, because I don't think that the rest of the week is going to be as calm, right? I mean, tomorrow you get services PMI numbers, and if manufacturing is that hot, I'm a little afraid what that might mean for services. Well, I don't know if it was enough, but for once, with me taking a trade after the news, I got an okay price. So like we said, after the initial move, the initial backwash wasn't very good, and it did push new lows really quickly. But then, it was like they reached those new lows, and then since then, it's kind of been slowly melting up. Oh, I saw something funny on Twitter, but I'll keep it to myself because I don't want to say anything about Kamala Harris. I don't like talking about her. I guess one thing I should note is that the liquidity is still about what it was earlier in the day, where most prices are around 15, 1600. So if we were seeing somebody really big come in and like really trade a big order to the downside or something like that, I think that they would have added some liquidity in the market, and you're not seeing that. Oh, there's 27 finally goes offer. Nobody's hitting 26.5. There you go. What's this? Apple leak reveals new iPhone 15 Pro feature shock. What's that? Port on the Pro will be a Thunderbolt 3. I know there's a lot of speculation in our community, but it's TB3. Operates at 40 gigabits per second. That's equivalent to 5,000 megabytes per second. By comparison, the Lightning port on all current iPhones is limited to USB 2 speeds. Oh, okay. So they're going to be catch up to the rest of the world. Gotcha. Wow. The government should confiscate all wealth over 999 million. Now you're just getting just confiscate all of it, huh? It's pretty sad to me that I don't see very many people in society that really care about government abuse of power. They're perfectly fine, 100% don't care about whatever kind of government abuses of power that are happening out there, as long as those abuses are not happening against them. But they're perfectly okay if you're a billionaire with the government basically stealing all of your wealth. How is it not a mafia? Well, it was like I was saying earlier. It's like, I don't know how you solve it. Like, it seems like taxes and a large federal government is kind of a necessity in the modern world, but like it creates a perverse incentive for the government to just try and get as big as it possibly can and to accumulate as much power as it possibly can. And how do you put a stop to that without taking away their ability to levy income taxes? So you're kind of screwed either way. I don't think so. We will look at this era in some distant future and be perplexed on how we handled things and what was going on, the same way that we look at no, I don't think so. I think that they'll understand exactly why it was the way that it was. And the sad truth is that in some distant era, they'll probably have similar types of problems. We're able to recover the bid 27.5. They're going to push it again. Neither of us will be around to prove you wrong. Well, my question would be, like, what would be the huge shift that would change us from that? Yeah. So let me give you an example. The people in France are like protesting like crazy. There's like violence and all of this sort of stuff. And the leftists, they get excited by that. They're like, oh, people are protesting. Everybody's getting together. This is good. This is the moment we've been waiting for. But you know what usually happens after that is it kind of dies down and everybody forgets about it. Yeah, already forgotten about how Occupy Wall Street ended up going? Like, the issue is that France has, well, all of these Western countries have an insurmountable funding problem. And there's no way around it. They cannot fulfill all of the promises that they've made. They straight up can't. So some services are going to have to be cut in some areas, and some taxes are going to have to increase in some areas. And people can protest as much as they want, but like, it's not going to stop it from happening, because the choice is basically either cut services or the country goes kaput, right? And people have too much at risk to let the country go kaput. So probably the result is that your retirement age is going to have to go up to what it is for everybody else, right? So it's like, the system kind of keeps it in line and prevents things from getting too far out. And you would have to have something really, really insane and I dare say completely unpredictable in order to kick us out of that. But I guess I would be bigger than that, is that I think that the reason that we kind of get stuck in these things is kind of we're coming more into the limits of human nature and human systems, right? You would have to have a dramatically different system. One that hasn't been invented yet. And frankly, may never be invented. That 27 gave way a little too easily. I hate to be a downer. I'm really optimistic about the future, but I also think that future generations will be dealing with pretty similar issues to what we do today. And there's 26 goes as well. Fairly easily. And the 30 you're coming down with it. Think worse? Well, maybe in some respects could be worse in some places. I don't know. The big issue is again the whole like government debt entitlements issue. I don't know how you solve it, and it seems like it's something that if you don't do something about risks destroying the entire system, yeah. I would still say that at some point they're gonna have to fix it because they have no alternative, and that's what's gonna eventually drive it to happen. But they're gonna wait until the last second, and it's gonna be as ugly as it can be, you know. I don't think things will go kaput, but it'll get as ugly as it can get, you know. Who knows? Maybe the productivity improvements with artificial intelligence and the boom in the economy that's going to create will increase productivity and GDP so much that it will make all of the debt that we've taken on at this current time just seem absolutely trivial, and everybody will forget about it in the future. That's totally a possibility that we're discounting. That we're ignoring. It's totally possible. I don't think that's the way that it's going to go out, but and not only is it totally possible, it may actually be the more likely scenario. We'll see. Well, maybe we'll see. Maybe we won't see. Maybe we're too old. Maybe that's 100 years from now. Okay, so there is an iceberg at 25.5. After there hardly being any liquidity through this area. Hey, they traded through it. Decent offer, too. I think to go much lower than here, though, we'd have to have the 30-year decide to do the breakdown. Why do you call ZB the 30-year? Because it's easier to say. I know that it's technically not a 30-year, but that's still what they call it. No, so ZB is called the 30-year treasury, and UB is the ultra 30-year treasury. Right? Even though it's not actually a 30-year treasury, it's more like a 21-year-old year treasury or something like that. Listen, I'm not the one that named it. Is it U.S. Treasury bond? Okay, let's go look. Let's go look. Oh, okay. It's U.S. Treasury bond futures. I don't see the 30-year. Hold on. Ultra US Treasury bond futures. But here's the thing, is that if I come in and not if I come in, if a new person comes in and they hear me say bond, I don't think that most people would understand or appreciate the difference between what we call a bond and what we call a treasury. You know what I mean? I feel like that even though it's not really a 30-year, that's the best shorthand to show to them what we're looking at. Is that this is the 5, the 10, and the 30, but even though it's really not. Call it ZB. I guess I could try doing that. Hey, by the way, remember up here I said, you know, the liquidity is still kind of light and we've been bubbling up. And then there was a couple of places where I felt like they took it a little bit too easily, and then there was an iceberg. I don't know at which point this happened, but look at the liquidity now. There is way more liquidity than there was now. Now we're pushing 1800s and there's a couple of 20s down in here, right? So these sellers have some liquidity to sell into. We'll see what they do. The 30-year though, the 30-year really drove that. Like, look, they came down from 16. There's 4 ticks lower, even though ZN is still, I mean, ZN is trying to get through this liquidity. So the new generation is too literal. Like, here's the thing. I've never really felt like that what I called the instruments mattered that much as long as you understood what I was talking about. If it bothers us, now we have to sit down and come up with an intellectual framework about what is it that we're trying to accomplish by what we call the instruments and what we should call them, right? So if our goal would be to be cool, it confuses the hell out of you. Okay. So let's say goal number 1 is to not confuse Akshay. Okay. Goal number 2, I think, should be to sound cool. Yeah. We could, if we could say, we could call it. So what is the cool name for ZB? Or do we just call it bonds? Bonds is kind of sounds cool. I mean, it's short and it's easy to say. Yes, if that's shade at me, I am probably older than he. She was right. You new guys, you got to be careful about coming in here and what you say to other people in chat, because you got some very smart people that have been here for a very, very long time. Oh, there was an uptick there. At least in the 10-year there was. How about on the 5-year? I have reset that so that I can kind of track what's going on there. Since my stupid chart is still broken. Chart is still broken. And can't pull up my output window. So we can be nickels, dimes, bonds, and SPOOs, right? And if I was talking about the Ultra 30, which I never, or the Ultra Bond rather, which I never do, but I will call it Ultra Bond or Ultra 10 or Ultra Dimes. And I probably won't remember to say it that way every time. It'll take some rewiring of my brain, right? And then all of the robots that are either looking at this now or in the future to try and figure out what Seth's channel is about are going to be like, why does Seth talk about dimes so much? Is he a coin collector? Is this a coin collecting stream? He talks about nickels and dimes a lot. I don't know why he doesn't do quarters though. Aren't quarters more collectible? Yeah, Zian. Well, what do you want me to call the one? One has to be dimes and one has to be ultra dimes under that naming scheme, right? They're dimes and ultra dimes. See, there's no way to do this without using you. I don't think that we can accomplish all of our goals here. We may have to adjust our goals, huh? It is a better approximation of the 10-year. You're totally right. You see what I'm saying? Oh, we need to come up with nicknames for these instruments that are better reflective of what they are for the newbie. Because how do you go through that without explaining to them, well, okay, but this one used to be the 10-year, but then they changed the basket. Now there's this other one. So even though we call this one the 10-year, it's really not. This one is actually the 10-year. Like, you know, I don't have to go through that every time. And I guess you could just call it ZN. Well, okay, so what would be the advantage of me doing it in TN? Exactly. He just wants me to use the instrument names. Okay, well, I'll try using the instrument names. It just doesn't seem very, it kind of feels kind of cold to me to do it that way. Getting in and out of the way easier than in, yeah, I think you're gonna have to expand on that. Okay, so if I was actually trading the full treasuries right now, which I'm not, I'm trading the micros, okay, but if I was trading the big ones, what you're saying is I think that you should trade TN instead of ZN. And what I'm saying is I'm not sure that I actually, for the way that Seth trades at least, see a huge difference. The only real the real difference is the advantage in ZN is that it has more liquidity. And so ZN is more indicative of what's going on in the flows in the markets as a result. So if I were to come over here and trade TN, I would still need to have ZN up on my screen. I would still want to be looking at the ZN order book, right? And so if I want to minimize the number of DOMs that I have to have up, it would be, you know, that would be the reason to trade ZN. That's the only difference that I see. You get what I'm saying? Okay, so you keep, no, so that's not completely accurate to what I say. You keep ZB up as a proxy and say micro tends to track ZB closely, which has lesser volume than TN and has a tracking error. Okay, so I believe that when I have ZB and ZN up, that does give me a good enough idea of what the yield curve is doing for me to kind of sort out what the 10 should be doing here without having TN up. But I wouldn't say that it's a proxy. Like, I think that you need to have the 30s up anyways. It seems to me like there is an important component of the flows that comes through in the 30-year. To be honest with you, I think that there's an important component of the flows that comes through in the 2 years. That's the other thing, is that if there was anything that I was going to add to my screen, it should probably be the 2 year, right? ZB has the best tick to commission ratio. Do I need to say more? No, so let me just be clear. I think you have a really good point that there would be an advantage to putting ZT on. That you're totally right about that. The question is just, is it strong enough to justify messing our screen up and stuff? Right. Actually, you know what? For a while, I don't know if it's as big of an issue now, but for a while, one of the bigger concerns on my mind was like, am I using too many resources for really, really fast markets? You know, there has been a few times where I've come in and I've had troubles with that, but I think that I've been able to adjust everything and figured most of those problems out. And later in the year, I think we will upgrade the machine, and then that should give us a little bit more room. But and you know, I would have to put the 2-year over here. It would mess a lot of things up. I think I may be, that may just be my you know, I'm not autistic, and ADHD people are not as adverse to change so much, but I think that there is still kind of this desire for the comfort for like things being consistent. Like if all of a sudden where my eyes on the screen were different, like that requires a transition period for me, and I hate that. So I know it's like a really lame excuse, but that's my excuse. Well, I tell you what, they really put the squeeze on us, but I held through it, and it's paying off. I gotta get going. I think I'm gonna have to deal with taking this off soon, but I'm gonna have to do it off stream because it's time for me to get going. Totally lost track of the time. We can talk about this later. I mean, I can show you. We can make this we do have room if we get rid of the S&P 500 chart, right? I don't know. One of the things was that some of the changes that we made were to make them more friendly to like new viewers. And as of late, YouTube doesn't send very many new viewers to us. And, you know, I kind of makes us wonder if we really should do a whole lot for the new viewers. Like when somebody new comes in, they can ask the question and we'll answer it. And that would probably be a better way of doing things anyways. And having something up there just because it's familiar for new traders is probably pointless. So we could get rid of this and add the ZT. Totally. All right, guys, I will see you tomorrow. In the meantime, stay